Hi, my name is Kyle Zimmerman.
My name is Lovneet.
My name is Tu Ying.
And this is our Stock-Trak report for Finance 120 for Dr. Shahrokhi, spring 2015. Okay, so for the overview of Stock-Trak, it's a real-life simulation for the stock market for students. The Stock-Trak begins on February 16th, and each group is given $100,000 to spend on stocks, mutual funds, ETFs of their choice, so they can pretty much choose stocks that they know, any stocks that they're familiar with. Also, they are going to be competing with all the Finance 120 courses, all the students in the spring 2015 semester, and this continues all the way up until April 24th.
During our Stock-Trak investment, we chose not to limit ourselves with one type of market. Our main goal evidently was to make profit, and one of the key factors of this investment was to keep up with the market rate beta of 1. Beta less than 1 is less risky, which means that there is going to be a lower return. Beta higher than 1 is more risky, and there is more higher return. When Stock-Trak first started, we were more conservative to purchasing stocks because we didn't want to lose our money without being profitable. We decided to choose our stocks from different markets so that we could compare which ones would be beneficial and ones that would be riskier. Towards the end, eventually we started choosing stocks with more risks because we were trying to increase our return rate.
So our strategy for researching stocks was mainly Yahoo Finance and the Street Stock Screener. We would use filters on the street to see what the best buys would be for our stocks. And mainly in the beginning, when we were conservative, we were looking at mainly the low beta stocks. And then as we got more risky towards the end, we were looking for the high beta stocks. And also we would look for recent performance. So on Yahoo Finance, we would use like the interactive charts so we could see the recent performance like the last 3 months. And then also one of the strategies we had was to diversify throughout different industries because we were trying to cover all markets. So here are some of the stocks that we invested in. Broadridge Financial Solutions is a financial security firm. And then we also have Netflix, which is the TV show and movie internet streaming on demand. Then we also have Southwest Airlines. Then we have Priceline Group, which is a website for traveling, which helps consumers with airlines and hotels. Then we also have Starbucks, which everyone knows is the coffee shop. Then we have CVS, which is a retail store mainly known for its pharmacy and the health products. And then we also have Home Depot, the home improvement store.
QQQ and SPY are two benchmarks that we had to compare our stocks to. S&P 500 is an index based off of 500 of the top stocks in the market. QQQ PowerShare is an index based off of the top 100 technology stock in the market. Here is a graph of our portfolio versus S&P 500. Here is a graph of our portfolio versus QQQ. As you notice in our graph, there was a segment that had a huge decline rate. Our team noticed this decline rate, but were persistent to see what will happen because most of these were our stocks with betas below or near 1. We wanted to continue our conservative philosophy, so we kept them. But because we lost some value, we decided to pursue in riskier stocks to regain our loss and have a positive return with possible profits. As you can see, our loss started to decrease, and at the end, our return turned positive with a $4,000 profit, mainly because of our riskier stocks.
In conclusion, Stock-Trak was a beneficial tool for us students. It helped us gain our knowledge in dealing with stocks in the real world. After this investment, we can say that we are comfortable enough to buy and sell stocks. However, something to keep in mind about the stock market is that it can go two ways. Either it could serve as being beneficial or risky, depending on what techniques are used. All in all, one of the things we learned for further reference is to probably not wait too long to invest with stocks.